Let's talk to Marc Ostwald. He's a strategist for ADMISI. Right, specialised subject today, Mark. Davos. Okay, we see the leaders. I see Donald Trump is best friends with Theresa May. What goes on at Davos?
Oh, I think a lot of people would ask that question. What benefits are there for the world economy from this grand shindig? I don't think there are a lot, to be very honest, but we've obviously had some interventions this week. We started off with some interesting speeches from Monsieur Macron and Frau Merkel, and there is clearly a determination now to grab this nettle of Eurozone reform and the EU reform. I think one of the interesting comments from Mrs. Merkel was how Brexit had actually forced a lot of people's hand in Europe to stop thinking quite so nationalistically and to actually get on with doing things which everyone's been asking them for. And obviously the opportunity that exists at the moment with the momentum in the Eurozone economy being as good as it is, we're looking for another 0.6% overall quarter on quarter next week. So you're talking about in the region of something about 2.5% year on year. That's very solid by Eurozone standards, particularly as the potential growth rate's only estimated between 1.5% and 2%. The other obvious discussion point has been Mr. Mnuchin's comments about the dollar. I think one probably shouldn't take them quite so literally as the market did, but that one can understand why the market has taken Mr. Mnuchin's comments as the way they did. And what he said, obviously, was that he felt that a weaker dollar was good for US trade. Now, that is true, but it then sounds also like the US is abandoning its strong dollar policy. And I think it was interesting that he was slapped down by Mr. Trump. The only problem I have with this is Mr. Mnuchin is one of the many people who've come from Goldman Sachs, like Robert Rubin before him, and he should really know better. To suggest that the markets took him too literally is, well, you've worked in financial markets for long enough. Yeah. Why are you making comments like this when you know exactly how markets are going to be interpreted? But I think the key issue that comes of that, and obviously there was also some criticism of Mr. Mnuchin's comments yesterday by Mr. Draghi at the ECB press conference, suggesting that basically he was certainly going outside of the agreed statement by the G20 that countries shouldn't manipulate their currencies in either by their actions or what they say. But this issue of where the dollar is going from here is an important one, and is going to be quite critical to what happens going forward, because if the dollar is to weaken further substantially, then it is likely to give a fairly substantial boost to commodity prices beyond oil, which is obviously doing very, very well. And that's going to help everyone out in terms of this lowflation that we've had for some time. The downward pressures from technology are not going to go away. You know, that's a fact of the matter, and people need to live with that. But if we start to see inflation rates start to pick up, and we've obviously got some base effects in the February through June data, where we had surprisingly low inflation last year, they fall out of the comparison, and we're going to get this upward pressure there. So the question then is, where is the balance to be found between, obviously for a lot of other countries, the fact that the dollar's falling and commodity prices rising? The question is, will commodity prices rise quicker than the dollar falls, and therefore they will have that boost, or will this be exclusively a US thing? If it's exclusively a US thing, or largely a US thing, then obviously Mr. Powell, when he takes over at the end of next week from Mrs. Yellen, is going to have something of a problem, because the market's still discounting a low inflation backdrop overall. And they're probably right in that, but how low is very important when we've got real interest rates as low as they are at the moment. And we may get into a stage, if the inflation rate does start to pick up and the dollar remains quite weak, and I would emphasize that this is a case of the dollar being weak, not any other currency being particularly strong, perhaps with the exception of the yuan. How does he deal with communicating to financial markets? And by the way, we may well be doing 4 interest rate hikes this year, which will put us in a different plane. If we have US short-term interest rates of 2.25% to 2.5% by the end of the year, you've got cash as a very viable option then, and people need to start rethinking their portfolio allocations because they're not going to be under that as much, I should stress, as much financial repression as they have been for recent years.
And on that note, Mark, thank you very much indeed.